We're going to break China. I'm your host, Steve Van Metre, and thanks for joining me today. In today's show, I want to share with you how the Biden administration is planning to destroy China's economy. Now, you may remember from yesterday's show how China and Russia together are trying to do the same thing to the U.S. Russia's betting that the Western world needs energy, and China's betting that we need its big manufacturing base. The question that's going to come down to is who needs who more, or perhaps who can replace the other party the fastest. And if you thought for a moment that the U.S. policymakers weren't aware of what China and Russia was up to, and we didn't have a plan, well, we do, and you might be surprised to find out that we've already been working on how we're going to slow China's economy down and perhaps show them who they are really dependent on. Now, let's go to the news today. I want to head over to Bloomberg because something interesting hit the news today that we're going to go into a little bit of kind of some backstory to the China-U.S. trade issues, and then we're going to get into our plan of what we're going to do. And as you'll see, I think it's going to be highly effective. Putin, Xi hail ties as Russia struggles with war in Ukraine. And Russia-China ties are the best in history, and their strategic partner is a stabilizing factor amid rising geopolitical tensions, the Russian president said in a video call. He said Russia would seek to strengthen military cooperation with China. And of course, things are as good as they can be because Russia has a great place to offload its oil. They don't have to deal with sanctions, and they can get paid in yuan. And not that they want yuan, but they can convert that back to gold, which they want. And that's good for them. So, of course, they're going to feel very positive about their relationship. And China's hoping that they're not going to take all that yuan and convert it back to gold, and that they're going to be a consumer of Chinese manufacturing. Of course, now we know if we think about the U.S., China's biggest partner here in trade, and Russia, well, Russia's got a long way to go before they can replace all of our spending on Chinese goods. The nation started the year with a joint declaration of a no-limits partnership at a February summit, and Putin's invasion of Ukraine weeks later prompted China's ambassador to the U.S. to clarify that there was indeed a bottom line to the relationship, but perhaps not, as what we're seeing now is both sought to challenge the U.S. power and push for what they call a multipolar world. So here we see again, these two sides taking shape, but this is going to become an economic war. Of course, the question then, as I mentioned in the beginning of the show, is who is dependent on who? Can the U.S. replace China's manufacturing base elsewhere fast enough? Can we get to a policy of energy independence where we don't need to even think about Russian energy? And granted, we don't import very much of it in the past, and obviously none now, but the question is there a point in the future where we would become dependent on them? Likewise, are China's economy highly dependent on the U.S.? In fact, that, I think, is the bigger case. But let's go back a little bit and look at where some of this started. As China increases trade in Asia as U.S. pushes toward decoupling. This from the Wall Street Journal. China's growing trade with its Asian neighbors also reflect the ripples of the worsening spat between the world's two largest economies that began with a fight over trade and has since widened to encompass technology, national security, and foreign policy. And so, of course, this makes perfect sense for what China's doing. You've heard about their Belt and Road Initiative, where they're trying to work with countries, neighboring countries, providing them economic stimulus and loans and parts and manufacturing and work, labor. They're doing all of these things to build their trade alliance next to their home, which is good. That's what you would want to do because they're afraid of what happens if they lose the U.S. The trade battle that took off in 2018, along with subsequent pandemic disruptions, inaugurated a reordering of global supply chains. Manufacturers based in China have sought to shift some of their elements of their production lines to the country's Asian neighbors, either to sidestep tariffs or insulate themselves from the risk of future upheavals as relations between the U.S. and China deteriorate. And this is something we talked about in a recent show about how China's COVID-0 policy was bad for Western business. And it was only a matter of time before Western companies, perhaps tired of dealing with tariffs, tired of what's going on with these trade trade spats and maybe concerned of an escalation would eventually leave. And so we're starting to see that now, and that is good for other countries, but not good for China. And now we look to what's actually the change now, the sea of change from Politico. Biden reverses decades of Chinese trade policy. Forget tariffs, they say. Biden's actions to crack down on Beijing's tech development will do more to hinder the Chinese economy and divide the two nations than Trump ever did. And that's the key thing here, is what can we do as a country economically? Again, we don't need to have any other sort of escalation, but if we can slow the Chinese economy down and let them know that, hey, you are dependent, your future is dependent on us. And yes, you can go around to your neighbors and you can trade with Russia all you want, but there's nobody in this world that is as much of an important trade partner to you than us. So if you want to trade with us going forward, you follow our rules, not your rules. The White House and Congress are quietly reshaping the American economic relationship with the world's second largest economic power, enacting a strategy to limit China's technological development that breaks with decades of federal policy and represents the most aggressive American action yet to curtail Beijing's economic and military rise. Now, some of this stems from the fact that, of course, when manufacturers go over there to build their product, they don't have to give up their intellectual property. But what you may not realize is that China demands this from them. Now, they don't have to. Eventually, China, if they're asked, will not ask for it, but they will take that technology and they will attempt to reverse engineer it. So every time the U.S. goes over there for high-tech manufacturing stuff, you can guess how long it's going to take before they either reverse engineer it or figure something out to do with it, because they're going to. So imagine if we start taking that away from them, that will stymie their ability to stay up to pace with countries like the U.S., who are obviously the hotbed of manufacturing high-tech and coming up with high-tech solutions to problems. The new federal rules, executive orders, and pending legislation aimed at China's high-tech sectors, which began to fall and will continue in 2023, are accumulation of years of debate spanning 3 administrations. Taken together, they represent an escalation of former President Donald Trump's tariffs and trade disputes against Beijing that could ultimately do more to slow Chinese technological and economic development and divide the two economies than anything the 45th president did while in office. And you can bet cutting them off from our high-tech research is going to have a massive impact on how fast their country can grow. They'll have to redirect resources into that, and they just aren't in a position to do that in China. The new strategy, which the Biden administration internally calls its, quote, protect agenda, is being rolled out this fall and winter in a series of executive actions. In October, the Commerce Department issued new rules aimed at cutting off Chinese firms' ability to manufacture advanced computer chips. They will soon be followed by an executive order creating a new federal authority to regulate U.S. investments in China, the first time the federal government will exert such power over American industry, and an executive order to limit the ability of Chinese apps like TikTok to collect data on Americans. So you've probably heard about a chip plant going into being built in Southwest United States. There's a reason for that. That is to replace that high-tech manufacturing coming out of China that we don't want them to have. Now, of course, we've been manufacturing stuff that we probably shouldn't have been doing. I know we manufacture military hardware out of Taiwan, and so things are too close to their home and too far away from ours. But I also want you to see that by a federal action of limiting investment into Chinese companies, that's, again, all this is designed to do is to slow them down and to let them know, hey, you may need us more than we need you, because if there's something we're getting from you, we can either go to a neighboring country or we can just build it right at home. Congress is participating as well, drafting its own bipartisan versions of Chinese investment screening, potential rules on American capital flows into China, and restrictions on TikTok and other apps. Those initiatives come at the heels of Biden's Promote agenda, using the government to promote American competitiveness. That involved the approval of hundreds of billions of dollars of subsidies for domestic manufacturing in Chips for America Act and Inflation Reduction Act last summer, focused on breaking the U.S. reliance on China and new rules against U.S. companies working with Chinese chip makers, essentially saying, don't give them your intellectual property. You don't need to manufacture there, because soon enough, you're going to be able to manufacture here right at home. And advance ultimately its economic development. While American policymakers were previously content to manage China's technological growth and make sure it stayed for a few generations behind the U.S., security officials now seek to bring Beijing's development, particularly in chips and computing, but soon in other sectors, closer to a standstill. And of course, we know the future is going to be automated. We know that computer chips are going to be a more integral part of everyday lives. And if we can cut them off and slow their growth, well, all of a sudden, their economy, so to speak, in terms of its growth path, is going to grind to a halt. But that attempt at a middle road between decoupling and unfettered economic engagement is under attack by China hawks and free traders. Those who want a tougher stance toward Beijing point out that the total amount of trade between the nations boomed through the pandemic, feeding a record trade deficit between the countries. And that is perhaps the issue the U.S. faces here, is that we can't just do this without some repercussions. Because you have to remember, one of the things that we do is exports dollars. And foreign countries accumulate those dollars, they buy our debt. So if we're going to cut off China, as I want to show you in a minute, just how critical they are to buying U.S. debt, well, then we may face some other problems. But first, let's look at the trade deficit. And here you can see the total trade balance between goods and services did actually skyrocket during the pandemic and is now slowly trending back to normal as the global economy slows. But the real risk is here. China mainland is the second largest holder of treasury securities. And so if we're going to decouple from them, that means these other countries out there, these smaller countries, are going to have to start absorbing our debt. Either that or Congress is going to have to spend less, because what we're going to find out is if China's not buying our debt and perhaps even selling the debt they have because we're not trading as much, well, that means somebody's out there's got to buy our debt. And if no one wants to buy it, spending's got to get cut. So you can see our plans here, and it looks like they make a lot of sense that we're not just sitting idly by. We're going to fight back. The question is, who needs who more? My bet, China needs us more than we need them. And with that, I'm Steve Van Metre. I hope you have a happy new year. We'll be back here in another couple days. With that, thanks for watching. Thanks for being fans. Bye now.